Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly, and welcome everybody once again for another amazing video of DIY investing. As you guys noticed, by the recent rise in Bitcoin, Bitcoin has broken from the lows that has taken over 65 days to accomplish. I've been very adamant on this channel explaining why I'm bullish, why I expected support at 29K to hold, and why anybody that was willing to panic sell now is going to severely regret it long term. We are still very much early in the 4-year cycle. There's still a lot more upside to go, and we have always known that there would be some sort of summer sell-off, which is what we've experienced. Now that the lows have been put in, I'm going to explain to you guys my detailed analysis, my trading plan moving forward, and what I'm expecting across the board to close out the end of this year. If you're new and just find this channel, always remember to do me a favor by leaving a like, comment, and subscribing to this channel for more updates. Always remember to click that notification bell so you guys don't miss out on any of these amazing videos like the one provided for you here. And make sure you guys sign up and join the Discord server. Over 20,000 members are growing. If you guys want to sign up and join the rest of my community, share your own thoughts on the market, links are provided for you in the description to go ahead and do so. On top of that, if you're new, maybe you got wrecked, maybe you're just inexperienced inside of these markets, I have a free ebook and a beginner's guide to help you guys understand investing on the cryptocurrency markets, and it's free to download and it's going to help you guys out tremendously. So go ahead, check that out. Links are provided for you in the description. And with all that being said, guys, let's jump right into this amazing video today. Alrighty guys, so to start off this video, we're going to be taking a look at the chart of Bitcoin. So guys, as you notice, we have had a big rise inside of Bitcoin ever since, the bottom was put in at the news conference between Cathie Woods, Elon Musk, and Jack Dorsey, the CEO of Twitter. We saw Bitcoin immediately start to rise back up again. And so this is honestly what I was expecting from the very beginning. Even though there were so many people bearish throughout this entire period of time, it's to be what's expected. I mean, even up here, when the market was about to top out, that's when we seen a lot. That's when we saw a ton of predictions upwards of 100K. And obviously that was not what happened. We ended up getting a strong correction. So then after the correction, once we actually started to stitch in these lows, that's when you started to see a lot of 20K calls, sub 20K calls. And when I started to see that, I just started to realize, you know what, it's very unlikely that the market's going to go this low. There's a number of different indicators that we could point to. We knew that the amount of addresses from whales that were accumulating heavy amounts of Bitcoin, it was only trending up throughout this entire period of time when the market was trending down. So we saw a bullish divergence between the whales. The price was moving lower, but the amount of Bitcoin that whales were holding was increasing higher. That is usually a telltale sign the smart money's buying the dip, the bottoms are going to be in, because smart money only accumulates when the timing is right for them. And so this is kind of what we're seeing, guys. In my opinion, institutions bought this entire dip. They were accumulating. It was a long struggle for most of us. If you don't have the patience to last throughout these periods, you really shouldn't even be investing into these markets, because guys, we spent about the same amount of time up here as we spent down here, and it's literally just a perfect shakeout to get all of the weak hands out of the market. What I constantly updated you guys with was this support level down here at about 29K. I said, unless we're going to break below this, there's literally no reason to be shaken out. This is merely a good buying opportunity for your long-term bags as we close out the end of this year. And that's exactly what happened. And I mean, if you really look at the chart, what was bearish about this? Every single reaction at this level produced a big wick. We got a bounce on the upside every single time. And then it was really this sell-off here that was the most trying for most people. This is where everybody started to get really bearish, started to short the lows. And sure enough, that was the exact bottom. And now we're rallying back on the upside. And so we've had a strong rally on the upside. What does this mean for Bitcoin moving forward? Well, first off, guys, one of the resistances that I was personally watching for was here at about $34,500, about right here approximately. This is going to be one of the big resistances that I was watching for. I wanted to see us break above this level. If we could hold support above this level, then I felt like that was going to ultimately take us upwards of our strong resistance at about 41K. And thus far, we're kind of in the middle. We've far surpassed 34.5. We're just under that 41K threshold. And so as it stands right now, I really wouldn't be surprised to see Bitcoin rally up and tag this upper resistance here just before we get any type of major correction. I'm personally not going to be buying anything. I accumulated during this dip here, and quite a few of my alts are actually in profit from accumulating off those lows. And so now that Bitcoin's impulsing, I'm kind of staying away. I'm going to be waiting for a bigger correction back down before I look to leverage back in. Now, as it stands for me, when I look at this chart, I think it's likely that we end up coming into contact with this resistance. This is pretty strong resistance that I think will ultimately tell us if we're going to be going higher or if we're going to be going lower. Because obviously, if we can't get above this level at 41K, that really could signal that a new low could be in. And we could see another correction all the way back down to that 20K target. Do I think it's likely? Of course not. I do not in the slightest. And if that was the case, that would really throw off the 4-year cycle timeframes. I would have to completely rethink my strategy. And chances are that would signal a new bear market. I don't think it's likely because that would mean we would fail a pattern that we've been in for over 7 years, being the 4-year cycle theory. And so I'm going to be watching for this level here at about 41,500, or I should say about 41,250. That's where I'm going to be watching for Bitcoin to ultimately start pulling back, if it isn't already going to be pulling back right now, because we are kind of at that same supply zone. If I was to draw a box, because you guys got to understand that there really isn't going to be one specific line that you can look at that's going to be the end all do all. They behave in ranges. And as it stands right now, we've already kind of tapped that supply range that I would personally be watching for. And so we could get a correction where we're at right now. We could peak above a little bit. Regardless, I don't necessarily expect us to be breaking above this. But I mean, anything's possible. At this point of the market, guys, you don't really want to try and be picking too many tops. The biggest bit of advice that I'm going to give you guys right now is how I'm personally looking at this market for scaling into new entries. I've already got all of my long-term bags packed. I accumulated what I wanted to accumulate. I posted those in my signals. And we pretty much bought the lows originally all the way back down in here in this original sell-off. And so we accumulated. We're looking to just mainly hold from here. But I will say that what I'm looking for next is actually going to be leverage longs. Whenever you see a breakout of an accumulation range, that first pullback after that major breakout is really where you want to leverage yourself if you plan on actually having some leverage long positions. Now guys, when I say that I'm going to be taking leverage long positions, I'm not going to be taking 20x leverage. I'm not going to be taking 50x, 100x leverage. I'm not even going to be taking 5x leverage. I like to take 1.5x leverage. I merely use my extra Bitcoin as collateral to take other altcoin positions. I'll pay the fee, I'll pay the lending rate, whatever that is. And that way I never have to sell my Bitcoin. I keep holding it, and I can also leverage into altcoins as well and just maintain that profit. And so for me personally, the way I'm going to be looking at Bitcoin from here, whether we top here, whether Bitcoin blows past this range and then we flip it like this, I don't care. It literally doesn't matter. For me, I'm just waiting for a significant pullback. And you guys will know firsthand, if you've been inside of these markets, every single impulse, no matter how big, is going to produce some type of a pullback. Whether this thing far extends this resistance here at $40,000 and we end up coming all the way back up to 47, 48K before a pullback, I don't care. I have nothing but patience inside this market. I've already been accumulating for so long that I can afford to be patient in the market. And even if you guys haven't been accumulating, just be patient from the get-go. I mean, no matter what, we will see some type of a pullback. Whether that pullback's like this and we end up selling off, approximately at where we're at right now. If we do sell off where we're at right now, I would once again be watching for about this $34,500 level. So these are really going to be the two different scenarios that I foresee for Bitcoin. Either we're going to get really overextended, we're going to rally back up to approximately 47, 48K before we get a pullback, or we pull back pretty close to where we're at. We might peak up in this little red box a little bit more, and then we would see a pullback to about 34,500. These are going to be the two scenarios that I'm watching for. Regardless, I'm going to be buying the dip on both. If we don't get this first little sell-off, I'm going to be buying the dip off of the next one, because you guys got to understand that we should be expected to see anywhere from about a 15% dip, maybe even 20, maybe even more than that, depending. This has been a very volatile cycle, guys. We've seen a number of dips inside of this entire uptrend that have been pretty big. I mean, we can go all the way back down here. Even when the dips weren't that crazy throughout this period, we still saw some pretty decent sized dips. I mean, this one was about 15%. That was a pretty small dip. This one was probably about 20%. About 21% there. We saw another 10, 15% dip there. as we started to break all-time highs, we saw a few more. This one was probably closer to 25, 30. That was about 30%. And so guys, we are accustomed to seeing these type of pullbacks inside of the market. And so as the market's uptrending, as everybody's getting really bullish, as all of the bulls are coming out of the woodwork, sharing previous calls that they made, saying how smart they are, that they nailed the bottom like every bull likes to do, you just understand that now is not the time where you want to be jumping in. You want to be waiting until you start seeing the bears coming out. Oh, I shorted the top of this move. Oh, look, it was bearish all along, right? That's when you want to be leveraging back into the market. And so whether we end up topping where we're at, whether we come up here to about 41 and a half, you know, if we come up to there to 41,000 and we pull back to 34 and a half, that's going to be about a 15% correction. If we come all the way up to, you know, approximately 48, 47K and then pull back, that's going to be about, you know, 18%, right around that area. 15 to 20% we should be accustomed to seeing at some point. If we see a 15% dip on Bitcoin, we'll see, you know, 25, 30% dip on the altcoins. That's just the way it's going to work. And so even though the markets are breaking out of these bottom structures, I've been very adamant about telling you guys that this was going to happen. Now that it's happened, it's important to just not buy into the FOMO. Just don't get too excited right now. We still have a couple resistances to clear here, but I will say that I'm confident that the bottom's been in. I've been saying that for a couple months. I haven't even been uploading on the channel because nothing's changed. I told you guys my trading plan. It's followed my trading plan. We have yet to break below 29K. I said as long as we're holding support above 29K, merely a good buying opportunity. And I said if we could come back and start clearing some of these previous resistance levels, that's when I would make a new update. So I'm here making an update for you guys, and I'm telling you guys right now, the way I'm personally going to be trading this market from here, I'm going to be looking for a 15% dip. I'm not going to be looking to buy anything until we get that major dip. You know, and when we do get that major dip, I'm going to personally be looking for low leverage long positions, because here's the thing, guys. I accumulated some low leverage longs all the way back here at about December of 2019. I accumulated some more, you know, just before COVID, and then I accumulated some more just after COVID in April. So my first accumulation was in December of 2019. I bought Cardano at 4 or 5 cents is when I went long technically. And then I added to my position on Cardano right before COVID. It was about like 3 or 4 days before that crash, you know, whatever. And then I ended up adding to it again around April the 10th. And so I had quite a few low leverage longs that I built myself all the way back down in here. And I've made so much money off of about a $3,000 position. You know, it went up and I've probably have, you know, 70 grand profit inside of that move. And I've just been holding that for a long time. The fees are a little bit higher than I would have liked, but that's just kind of the process of trying to hold a low leverage long position for 2 years. Now I'm going to be building myself some more low leverage longs, because here's the thing, guys. Where we're at in the grand scheme of things, we are preparing for wave 5 inside of this next move. So here we are. I'm going to actually remove all the drawing tools real quick. Well, before I do that, I actually want to jump into something. I'll jump into this Elliott wave count in a second, but this is actually a pattern that I shared with you guys a while ago. And if you guys remember, it was, you know, probably a month ago that I shared this. I said that the current market structure looks a lot like this move that we saw right here. And so if I actually take this, let's get this copied over here, and let's apply it to what we're seeing over here, because it's pretty much following exactly to what I thought was going to happen. And the market structure went down slightly more, but it actually followed closer to this pattern than I originally thought it was going to. So let's look over here. So this is a pattern that I was personally watching for with Bitcoin, and we pretty much followed really closely to this exact pattern. We made this pattern after Bitcoin topped at 14K. We came down, had a big correction, and then we popped back up. You know, obviously this ended up going back down into a new low, and I don't necessarily foresee that happening this time around, because I expect that we're going to get another new all-time high. But this is pretty much what we're following to plan. And so what this shows is that we would actually get that move upwards of about 48K, 47K, and then we pull back. We really need to see support hold after that move. And so we're going to keep watching and see, but I just wanted to give you guys that little update, because it has followed really closely to what I was trying to share with you guys all the way back there. You know, I think it could overextend. We could go straight to 48K. You know, maybe we end up just rejecting at 41K. Regardless, it's obviously going to be more bullish if we can flip that 40K level and then hold it as support, but it's not always, you know, a given. We might end up getting a short-term pullback before then, and I'm going to use that as an opportunity to accumulate some low leverage long. So let's remove all the drawing tools. let's get it to a 5-day time frame, and let's actually zoom out here, because guys, what we are going to be getting ready for is going to be the big impulse, a big one. I'm telling you guys, wave 5. This was wave 1 from 14K back down to 3.8. This was wave 3. We're bottoming at the bottom of wave 4, and we should be accustomed to seeing another 5-wave impulse from here. Now, one of the things I wanted to point out to you guys, 5-wave impulses inside of a commodity market oftentimes overextend. Now, basic Elliott wave theory will have you understand that wave 3 is generally the biggest, and wave 5 is usually about the same size as wave 1. And the reason for this is this. So wave 1 starts the impulse. This is the first higher high in the new bull trend. Oftentimes, it's coming, well, I mean, I shouldn't say oftentimes, it always comes after a major correction. So Bitcoin pulled back about 83% inside of this move. The first impulse is generally the smallest because of the fact it's the first one. Smart money starts this hype, and there's no real retail that is trying to drive up that price because they're too scared. They panic sold the bottom, and they have to watch the first impulse happen without them, right? And so the first impulse is generally the smallest because it's the first move after a major correction, right? Now, that's why wave 3 is generally the biggest, is because all the retail investors that shorted the bottom and then panic sold right here, they watch this first impulse happen, and then they start saying, oh man, I need to get back into the market. I'm going to miss out. And so that's why you start getting this big overextension in wave 3. It's because that's when retail generally jumps into the market for the first time. Smart money starts the impulse here. It starts the new bull trend. And then retail kind of drives the prices into wave 3. Now, oftentimes, wave 5 is going to be about the same size as wave 1 because in wave 5, smart money takes profits and retail investors provide liquidity for them. So remember, guys, smart money, the only way for them to actually take profits is they have to find somebody to sell their crypto to. Well, who's going to be the person that's going to end up buying the top? Retail investors. Now, when it comes to a commodity market like crypto, like gold, like silver, like oil, commodities oftentimes have an overextension in wave 5. So general Elliott wave theory states that wave 1 and wave 5 will generally be about the same size, with wave 3 being the biggest. Now, this is not always the case with crypto, and I'm sure if you guys go back to what we saw in the last cycle, you'll start to understand what I mean. I'll count the Elliott waves right here. So this was wave 1, went from pretty much like 160 bucks all the way upwards of the all-time high. Wave 3 was right here, pretty big move, definitely bigger than wave 1. But then wave 5 was this move here. Very, very big overextension, straight parabolic, almost zero pullback. Any pullback was immediately bought up in the same week. And so this is honestly what we should be accustomed to seeing inside of a cryptocurrency cycle. Wave 5 is oftentimes an overextension. Now, here's something to keep a note of, guys. I honestly think that 100K is a bare minimum target. If Bitcoin is to end up just, not having that great of a wave 5, smart money takes a lot of profits, 100K seems about reasonable. I think it's likely that Bitcoin hits 100K. Now, for me personally, I've always foresaw Bitcoin going upwards of 200K, and my target personally has been 250K. And so what that would mean is wave 5 gets a massive overextension. We see another wave 5 similar to what we saw inside of 2017. And, these are going to be the points in the cycle where, once again, it's hard to say, oh, it's going to hit this exact price, because once the market starts to go extremely parabolic and there's almost no pullbacks, it's hard to even know when the heck it's going to stop, which is, once again, guys, why I'm targeting time frames. I'm going to be targeting the end of the year. I'm going to be taking profits at the end of the year for Bitcoin. You guys already know that, and that's because I fully understand that I'm not capable of predicting exactly the top for Bitcoin. There's no technicals. There's nothing that's really going to tell you, besides maybe the first lower high in the new bear market. The best thing to do is sell into that hype. Whatever it is, just take your profits. A bit of advice I want to give you guys right now. There's going to be a lot of you during this 5 wave, because it happened to me in the last cycle. I'm speaking from personal experience, and I'm also speaking from watching so many other people make this exact same mistake. In the last cycle, in this wave 5, everybody started to get very, very delusional. A common thought that everybody had at the top of 20K was, oh, Bitcoin's just going to go to 100K. It's going to keep going up. Institutions are going to come in and just pump the prices even more. And that was on the news of the CME futures, right? Futures launched. Everybody thought that Bitcoin was going to go to 100K, but CME futures was the exact top because now institutions shorted it. For the first time ever, Bitcoin had a market where real institutions, real billionaires could short it, and that's exactly why Bitcoin crashed. This time around, I'm starting to see a lot of people calling for a super cycle. It's honestly the exact same psychology as the people that were calling for 100K. This time around, people are going to be calling for a super cycle. They're going to say, oh man, Elon Musk, Michael Saylor, Cathie Woods, all of these major institutions are now buying Bitcoin. That means that they're never going to sell. They're only going to accumulate long-term and hold. It's only going to keep going up from here. You will hear that. You are going to hear this type of delusion inside of this Wave 5 structure. And I'm telling you guys right now, do not fall in line with that way of thinking. There will be a major crash. We will see an 80% pullback once again inside of this market. We'll have a year-long bearish market decline. And the people that are ending up, holding long term, they're going to convince themselves to hold by saying dumb things like, oh, the super cycle, institutions aren't going to be selling, so why would I? And they're going to watch the market start tanking. Another thing that I see people already making the mistake of is locking away their cryptocurrency in staking contracts for long periods of time. You don't want to do all of that. You don't want to assume, oh man, I'll just hold throughout the bear market, I'll just keep staking, and I'll earn enough that I won't ever have to worry about it again. This is not the case. Inside of a bear market, altcoins especially will go way lower than you can even foresee imaginable. And this is what happens every single time. They end up having these massive 80, 90, 95+% pullbacks. They fully retrace their entire bull cycles. And a lot of people end up falling in line with the way of thinking of, oh man, these things are, I'm in touch with great projects. They're going to last long term. Institutions are buying them. They're not going to sell them. I'll just stake and I'll just hold long term forever. This is the dumbest way of thinking you could possibly think, because here's what's going to happen. The market's going to go up. You're going to lock away all of your cryptos. You're going to start to see the market decline, and you're going to notice that, oh crap, the market can actually halve 50% and keep halving 50%. Most people think, okay, Bitcoin, will go down 50%. And then it'll go down, another 20%, and then that's it. And then it'll go back up again. But inside of a bear market, you're going to have multiple 50% pullbacks. It's going to drop 50%. It's going to pump. It's going to drop another 50%. It's going to pump. It's going to drop another 50%. And it's going to keep doing this until your altcoins literally go from being up all the way up here to pretty much back down, even below where you originally bought. You could have an amazing entry inside of the bull market. You could get in super early. You could have got in 2019, 2020 in some of these great altcoins that are going to perform very well. The problem is if you don't take profits inside of this bull cycle, once the bear hits, you're going to watch all of those profits evaporate, and it's going to happen quick. And then all of a sudden, you start to have anxiety set in. You start to have fear, uncertainty, doubt. You start seeing negative news. You start hearing regulations that come in. Certain cryptos are going to fail and go bankrupt. These are all unforeseen events that most people don't even think ahead for. And I'm telling you guys right now, as somebody who watched this happen in the last cycle, as somebody who knows it's going to happen again this cycle, just take your profits, get 80% plus out of crypto. If you really are confident on a select few coins, pick 3 and hold them. And you seriously want to be taking at least 80% of all of your profit, all of your crypto. Get the heck out of the markets, because here's the thing, guys. Let's say you make $1 million when Bitcoin's all the way up here. By the end of this bear cycle, you're going to have, if you're holding all of your altcoins, you're going to have 90% less than that. You might only have 100K. And when you go from being a millionaire to now only having 100K to now only having 50K, and it keeps dropping, that's when you start making irrational decisions. That's when you panic sell market bottoms. And the market is literally designed to steal all of your money, transfer the money from the weak-handed, from the weak-minded to the smart money that can sit there and stomach all of these corrections. Because you guys got to understand, institutions will be taking profits. They will dump on you guys heavily. They're going to dump straight on your heads. And if you aren't willing to sell yourself, if you aren't willing to take profits on your crypto, you're just going to be the idiot that loses all of that money and then has to think to themselves at the bottom of the next bear market, man, that was stupid. I should have never done that. Don't make those mistakes. I already see a ton of people saying, I'm just going to stake. I'm just going to hold on to this. And that's literally the worst thing you could possibly do. So that's a little bit of advice I can give you. Let's talk about Ethereum real quick. Ethereum, this is actually a chart that I was watching for, specifically this descending triangle. It was pretty obvious to tell that Ethereum was looking like a descending triangle, but we broke out of this. So this is a bullish reversal. This was not a descending triangle. This was a failed attempt at a descending triangle. And so now the next move that I'm watching for ETH is going to be about 28K to 3,000. I think it's likely that, we end up coming up here, we might get a little pullback in between, but regardless, I think it's likely that we end up rallying upwards of about 2,800 per ETH. This is going to be a really strong resistance that we need to clear. If we can't make it above this, then that's not going to be very good for Ethereum, but you guys already know, I'm pretty bullish on the whole market as a whole. When we zoom out, when we take the time to just analyze things from a face value perspective, I mean, this is still only wave 3. We had wave 1 here. Wave 3 generally breaks all-time highs, and wave 4 retests those all-time highs. Sometimes it doesn't go all the way back down to those all-time highs like ETH did, but we're still going to get another 5 wave coming after this. I think 10,000 per ETH is very likely. I've always said 20,000 per ETH. 20,000 per ETH would look something like this. That doesn't look too unrealistic in my head. I think it's very likely we could see something like this. And so guys, there's still a ton of upside potential left. Still just keep holding, ignore all the FUD. But take your profits. This will be the final rally in the cycle. And if you do not take profits into that hype, even if you don't sell the exact top, it doesn't matter. You are going to get completely hosed inside of the bear market. And it's the worst thing in the world to make a ton of money and then just lose it all back because you're too ignorant and you just keep holding and you keep holding and you keep holding. Because what ends up happening is you hold. All of a sudden you're a millionaire. All of a sudden you're not. You're back below 6 figures. And then you start really getting emotional. Then you start thinking, oh man, I got to save some of this profit. I'm just going to sell, and then I'll just rebuy the dip. Well, that ends up being the market bottom. You panic sell the bottom, then the whole market bounces and you look like an idiot. I'm telling you guys, this is what happens to retail investors. I'm a retail investor. Even though I've made good money, I've understood how the cycles work enough for me to turn a profit. And I'm going to be selling everything I possibly can in this next move. This has kind of been a long video, me just mainly rambling about a lot of crap, but I'm trying to just make it very clear to you guys that this will be the last rally. You want to take heavy profits. We're coming close to the end of this 4-year cycle. When that happens, you want to be completely out of the market, 80% of your portfolio at least, and then be looking for the end of 2022, the beginning of 2023 to buy that low. Guys, one final chart before we wrap up today's video. Market dominance of Bitcoin. As you guys can see, we're actually getting another impulse, so that's obviously not greatest for our altcoins. Bitcoin's looking like it wants to go quite a bit higher. It's now breaking out of this short-term resistance here. Which is obviously not that great for alts. This looks like an ascending triangle type of formation here. And if we get a break above this level, we should be targeting, quite a bit higher. Let's take a look here. Our target would be all the way up here at about 56%. If this is going to be an ascending triangle, that's going to be our target. It's going to be about the same length as this entire triangle is, which takes us all the way to this 1618, all the way at 56%. And so it could happen really quick. It might just be a quick spill. This is generally what happens during breakouts in Bitcoin's market. It outperforms altcoins in the short term, and then it'll kind of flip. And so I think it's likely that Bitcoin's going to end up breaking out of this. We're going to end up coming all the way back up to about 56% inside of that dominance, which if we draw a line is going to be about here. And that's ultimately going to take us, once again, in my opinion, to a new low. And we'll get one more big flush. And so, guys, in the short term, Bitcoin's going to outperform the altcoins. We're accustomed to seeing that after a major freakout and shakeout inside of the market. Bitcoin dominance looks bullish. I think it's likely we end up rallying up to this 1.618 level at 56%. After, I would expect another new low. And that, in my opinion, should be the final low before the bear market hits and we do this type of a pattern all over again. Anyways, guys, this is the video I had. Just wanted to share with you guys my thoughts, perspectives. Make sure that if you guys found value in this, to leave a like, comment, and subscribe to this channel. If you guys would like to join the Discord server or download my free ebook, links are provided for you in the description for that. For the people that want to sign up for my VIP video course or signals, links are also provided for you in the description for that. Thank you all so much for the support. And with all that being said, I will catch you in the next one. As always, peace out.